Welcome to the 2019 Baby Boomers Tax Update. I'm your host, Marialana DiMarzio, and I am here with some members of America's largest tax team, Madeline and Fran. Thanks so much for being here.
It's our pleasure.
So, I think everyone is aware of the changes for 2018 that we have a new, Congress passed new tax laws, and there's been sweeping changes, right?
Yep. Absolutely.
And a lot of people were not prepared.
Absolutely not. It's kind of I'm going to say interesting, but people are coming in and they're very surprised because their refunds are not what they expected, and they're a bit angry about it. And you have to sit and we have to talk to them, explain to them you took more money home. So now, your refund will not be as large, and we have to talk to them through that. And it's very hard for them to accept sometimes and understand all of that. So,
So can we just give them a little bit of detail as far as what we're referencing to? For an example, if somebody didn't realize the $25, $30 to $50 a week extra that they got in their check, let's say it was $200 a month, and that's $2,400 in a year's time, that more or less, that is the difference of what you're seeing in the taxes this year.
Absolutely.
So you got it in your paycheck already, so you're not getting it reimbursed like a bonus, and you didn't save it.
and now you're suffering.
And now,
Right.
okay. In addition, though, there's a difference between the federal and the state, which I think a lot of people are a little confused about and don't completely understand either. So we're going to go one by one. So what is the biggest effect, the change that has the most effect on most people? Just the simple fact that they didn't realize they had a little extra in their
Not
paycheck?
only that, because there's so many other changes and some offset the other. So the standard deduction is an amount that the IRS sets, and you don't pay tax on that. That was doubled compared to 2017's.
So now
Okay,
that's
this is a good
doubled.
thing.
That
Right.
sounds fabulous,
Yes,
right?
yes, but that's my point. It is also offset by the fact that you no longer have a personal exemption. So for every person on your return, you used to get $4,050. That's what the last amount was. No longer qualify for that. It's just been eliminated.
So as far as what you mean person,
Yeah.
you mean spouse.
Yeah, no, anything, any dependents,
Dependents.
anyone on the return. Taxpayer, spouse,
Well, why
single
I'm confused
person.
with that is because isn't there the child's?
There's a child
credits are
tax
different,
credit, which
yeah.
is different, but you also are allowed $2,000 for your children until they reach the age of 17. So that's also a bit of an offset for the exemption that you're
But that's
losing.
$2,000 as
Right.
opposed
Right.
to the $4,500.
Well, let me also
But-
explain. The $4,050 was a deduction. The $2,000 is a credit. The deduction is going to lower your taxable income. The credit is going to reduce your tax.
Okay.
So they're going to help you two different ways. But like you said before, a lot of the problems are that people didn't realize they needed to have more money withheld because the withholding tables were completely revamped, and I don't think they were done exactly to match, because they did reduce the amount of tax you pay. All the brackets
Well,
went down.
I think the first year is that trial and error period.
Exactly.
Yes.
So
Right,
we should
right.
have really been more prepared because chances were they were
Yeah.
going to mess up a little bit. So they gave us back a little too much.
Right,
where
exactly.
They
exactly.
could have, if they would have left it the same, everybody would be really
Oh,
happy.
yeah, most of the time, yeah, exactly.
Most people
But-
would have, absolutely. But there
Yeah.
are people that are benefiting from it a lot more than others.
Well, I do. I read so many different articles regarding the new tax changes, and the high tax states are just not going to see it. And there's a handful of them.
Yeah.
The
Oh, yeah.
majority of states are not them, but there's the handful, and New York is one of them.
Yes, yes, here in New York, New Jersey, California.
Connecticut,
Right,
Pennsylvania,
exactly. The high-tax
California,
states.
yeah.
Right, because we have city and state tax. Some places have pretty high real estate taxes.
Right, and that's
Right.
not the federal government at all. That's the
Right.
state government.
These are the states, but federal, you have to report your income. They used to be able to take as much tax as you paid to local taxes, whether it was for real estate or income. That has now been capped at $10,000. So like you said, in a state like New York, you reach $10,000 real fast.
You know, what's funny is like some of the things that I read, like, yes, I
Yeah.
am used to New York. I'm in New York at $10,000. Doesn't even sound like a lot of money when you,
Right.
like, it's
Yeah.
for the year,
No,
for
it's
annual.
true, yeah.
And then somebody, you know, in one of these little to no tax states are like, what? $10,000? So there's
Yeah.
that whole,
Exactly.
Yeah, it
Different.
hurts.
Yeah.
It really does
Yeah.
hurt. But the one thing with New York that kind of is still helping some people is that you still can itemize on New York
Yes.
instead of just taking a standard deduction.
can we talk about who would benefit from itemizing? Because that doesn't really benefit everyone when you
Okay.
do that.
Well, the thing that they changed the most about itemizing, that they will not allow any more miscellaneous deductions, which included expenses for work. So if you were in sales or any kind of a job where you used your car a lot, traveled around, you had uniforms and union dues, none of that is deductible anymore. So a combination of that plus the reduction in the state taxes that we can take off, most people who did itemize no longer qualify. So yes, they increased the standard, so sometimes that comes out about even. So it's on a personal basis, so you have to see what's going to affect you personally, you know, whether or not you can itemize. They didn't touch charities. They're still completely deductible. Medical expenses are the same.
When you say charities, do you have to give 25%?
No,
To
no.
like
Whatever
have it
you
make
give,
a difference?
No,
Yeah,
no.
if
It
I
all
just gave
depends on your
$100,
income.
that's gonna make my.
If
No.
your standard deduction was $12,000, you're single, and now you were itemizing between, you know, your mortgage interest. Mortgage interest is still deductible. So your mortgage interest is $12,000. That $100 you give to charities is going to make a difference. It's an aggregate total. And once you get that total, then you can apply it and see what's better for each individual. It's really on a person-by-person basis to see whether
Now-
it helps.
So, you know, before I go on to something else,
Mm-hmm.
because I do want to touch about medical expenses.
Sure.
I like the way you said that, but you could still write off your interest, because I hear a lot of people
Right.
saying that you can't do that. But there's
No.
just a different limit on it? Or?
Yes,
Yes,
yes.
there's
Yeah.
a cap on it.
Right. Before, the mortgage, the total amount of the mortgage could be $1 million. Now it's $750,000. So if you're going to buy a house and you need a mortgage for $800,000, you're only going to be taking the mortgage deduction up to $750,000.
Which is more middle America than, because millionaires are definitely over the $1 million.
Oh, yeah, that doesn't count.
Right.
Yeah, millionaires have, you know,
They have different
things.
worries. They
yes,
don't
they
have
have
this
different
kind of
of
worry.
worries, not necessarily this. Yeah.
Okay. So now let's get into some of the medical expenses. We just touched on some charitable contributions, so they're
Right.
still deductible. What about the medical expenses?
The medical is 7.5%. Excuse me, over. What is it? Just help me
Your
with
adjusted gross income?
Right. Yeah, AGI. It's got to be
Right.
7.5%.
Over that. So,
And that's one of the
yeah.
few places where you also can take mileage as part of that, plus whatever it costs you to get to the doctor and back.
So there you
And-
can have your
yes,
expenses.
Yes.
So basically, you really have to strategize on what you're going to
Right.
benefit most from.
Right, right. Like say 1 year you know you're going to have expensive dental work or something. So you're going to bring up your itemized deductions higher. That might be the year maybe you want to donate something. So that it's going to bring.
I say visit the
you know.
doctor more in
Well,
between your
it's, you know,
sales.
using the rules to benefit you.
That's what I mean. You really
Exactly,
have to
right.
strategize.
You do, you
again,
do,
personally, to see
Right.
what is going to happen. Okay.
Now, you have to think of doing taxes the same way you do of almost running a business. Where are you going to get the biggest, I hate to say bang, so to speak,
No, it's
for your
true.
buck?
Right.
Because
It
you-
is
Right.
true.
Yeah.
Okay,
That's
yeah,
very
because
true.
if nowadays with the way this is with deductions, like Fran is saying, if you could put all of that into the year where you can maximize it, and it's legitimate, that's worth
Right.
doing.
Now, are people coming to you that you could help them rearrange that a little bit, or they really should have done more preparation in advance?
Well, now, of course, it's, you
Crunch
can't
time.
change it now. Okay, so what we can do now is explain it, try to get most people to have a little more money withheld, because you can go to your boss, get your, whoever does payroll, can change that. It's not set in stone.
Correct. Like,
You know,
in other
right.
words, if you could do married 4, married 3, single 1. I was someone who always said single 0, married 0, because to me this is interest-free money, and I'm more for I want to keep my money. I don't want to give it. And I was always somebody for that 0 is going to take me to approximately I'm owing 500 or I'm getting 500. But I never saw it as this is my savings, this is my bonus, which I know many people do, and that's like a different mentality.
Right.
But now they should really start paying attention and kind
Right,
of looking at it
right.
differently.
Yeah. Well, if you see a professional tax person, they can kind of tell you by looking at the withholding tables exactly what you can put down to maximize whatever, your refund.
Would you suggest like doing a projection? One thing that I was used to doing is the 9th in September. It's the 9 month. It's your projections.
Yeah,
And so
yeah.
they had October, November, December to catch up or
Exactly.
make a
Yeah,
difference.
that's fine.
What we do at our offices is we're open year-round, right? And what we'll do is we'll do your tax return, and while you're there, we're going to talk about things that might be upcoming for you, upcoming events that relate to taxes and how it might change. And we're available to do that anytime, every quarter, every week, whatever it is that you need to do. You come in and we'll do a free consultation for you.
That's excellent, because
And if
knowledge
you
is
don't-
power.
Exactly.
And you need to know.
You need to
Exactly.
educate the
Right.
consumer, because if we don't do that, then they get stuck in the predicament a lot of people are in right now.
Right.
And-
Because they just didn't know.
Right.
And
Right.
then they're paying the price for that.
They need
Right.
tax tips. It's very important to them to know that, because the average person, they actually use this as their savings plan. For a lot of people, this is what they use. And we need to help educate them so that they can see a full picture on how it's going
Right.
to affect
Because
them.
ignorance is not bliss. You have to educate
Right,
yourself.
right.
Right.
And you have to, that's the knowledge is the tool to carve
With
something
anything,
out
right.
that's
Right.
for you. It's not that it's not workable.
Right.
It's different.
Exactly.
It's different.
Exactly.
Because you're still mentioning some of there's still some things that are the same. It did change, but
Right,
yet
right.
it is the same. It's
It
just a
did,
matter of
exactly.
slithering through
Right,
it.
Right.
and seeing what works for you. Like people, I'm sorry to interrupt,
No, it's
people
all
who
right.
had taxes withheld at a straight percentage rate, like from Social Security or from a pension, where they didn't use the withholding tables, they're fine.
Right, they
Because
don't have an
took out
effect.
they took out the
It's
same
same
amount of
amount.
withholding, and they're doing sometimes better.
Right.
You know?
And the same thing with the low tax states, because it didn't
Right.
have the impact.
Exactly, exactly.
So,
Yeah.
but here in New York, we certainly did. Now, is there the medical insurance mandate for 2018?
Obamacare. Yes.
Obamacare.
Yeah,
That's
okay.
over.
It's the Affordable Care Act,
The
though, right?
Affordable
I know,
Care
it's
Act,
about-
yes,
Okay,
yes,
it's the Affordable
okay.
Care Act,
Right,
and this is the
right.
last year.
Yes, yeah, 2018 is the last.
After this year, you're not going to get penalized if you don't have it.
Right.
And for a lot of folks, that's a big difference for them, because there are people that really are struggling, and then if they don't have it, they're paying a penalty. And you try to help them. We advise people to go to the market so that they can get insurance, but some folks still can't afford it. And then comes time to do their taxes.
It's very high. And if you're a healthy person, you
don't
are
need it.
struggling with that expense
And-
because it's not what you need.
Right.
Right.
You need other things.
Exactly.
But then again, there are the people who do need it, because we're individuals. And
Right.
individuals
Everybody's
are
different.
Exactly.
Everyone is different.
Exactly.
So this would be the last year for that mandate.
Right. No
Right.
more penalties after this year.
Okay, because I thought that was already gone.
No,
No,
most people
Bill
did. Because it was part of the 2018 laws, except it didn't take effect until 2019.
Okay.
Okay.
Okay. So now, owning a home, we kind of touched on this, was always, beneficial tax-wise. And do you think that still is?
For the most part, yes. Because
Up until $750,000.
right, on your mortgage, right. But yeah, you do get the mortgage. Like I said, the real estate tax is up to the $10,000. So if you're not working in the city, you don't have you're not getting paid on wages, the real estate tax might be completely deductible up to $10,000.
Correct. Okay.
There's some other things that are not. There used to be a lot of energy credits. If you did some repairs in your home and put in windows and things, they've all been expired. So they did not renew those.
So I have to ask you, what about, so if somebody sells their home, because you used to be all your capital improvements on your home, your real estate broker, right?
Oh, yeah.
That's still all intact?
Yes,
That's
yes,
still
right.
all,
Yeah.
Okay.
You still get the exclusion if you're married jointly and you meet the rules, which means you need to own the house and live in it for 2 out of 5 years. Married couple can exclude $500,000 in gain.
so that didn't
that has
change?
not
That did
changed.
not change. So that's a wonderful thing. You know.
Oh, okay.
Yeah.
Is it still better to get married?
Well, there's no more
Now,
marriage
do you-
penalty.
do you mean
That's a personal
tax-wise?
question.
Tax-wise.
Tax-wise.
Married joints. I know people.
Right.
People tell me no, married, filing separately. What would
You
you
know
get
what?
married for and file separately?
You know, some people do better that way, but it's really,
Yeah.
it's not, that's the exception. That would not be
Right.
the rule.
Right. Yeah.
Oh, okay.
Because there are a lot of credits and things that married separately will not qualify you for.
That's what I'm saying. You want
Yeah.
to do married joint.
Yeah.
There's
yeah,
a benefit to
definitely.
that.
Right. Right.
Okay,
Yeah.
I'm mentioning it because this is a new day and age,
Yeah.
and everyone can get married to each other, and
That's right.
there's a lot of
Yeah.
excuses not to. But America has
Taxes
always
does not
promoted
work.
Right,
it
exactly.
for tax purposes.
Right, right.
Married joint is beneficial. So now, is there any age where you no longer have to file?
No.
They even get you on estate tax. They don't even, you don't know it, but you're paying after you die, right? Isn't that how it works?
State tax is it excise tax first place, but yeah, they do. The transfer of wealth can be taxable and at a high
Isn't that,
rate.
you can't even
Yeah,
go in peace.
yeah.
No, you
You
can't.
need a really good lawyer. You do. You need a good estate lawyer to get you out of those taxes.
Okay. Now, if someone discovers that the refund is lower for 2018 and they're not getting a refund at all, is there anything they could do for the next year?
Yes, there is. When you're working, you fill out a form called a W-4. And on there, it basically, you're putting what you want the employer to take out.
Right, your withholdings.
Right.
That's where you're putting. I'm
Right.
going to be single one, single
Right,
zero,
right.
the married zero, you know.
Right.
Right.
And if you also want extra, you can also put a percentage. I want an extra 5% or an extra $10 every
Those
pay
people who
period.
like the money back
Right.
should do that.
It's not only for that
It's
reason.
not only that, the state,
Right.
I am a single now because I'm a widow, right? And I always get stuck with the state. So I always take out more money for the state. And it's not for any other reason, it's just
see,
I don't
now,
want to pay.
That
Yeah.
reiterates because we're
Right.
here in New York, high state tax.
Exactly.
Not
exactly.
the benefits. So yes,
Right.
and that's the thing that people have to come to terms with now.
Mm-hmm.
And it's, I love yelling at Congress. I write them, email them. That's my money you're playing with. I don't like what you're doing with it, and we have that right to do that. We need to do it also with our state, the governor and mayor, because that is the way it works. Some people
Right.
think they could yell at the TV, and that doesn't do anything. They could certainly come in and talk to either of you.
Yes.
Right.
Well, we'd be more
Right?
than happy to
So
try
just
to
remember, the
advise them.
W-4 though, that's their tool to make that change. And that can be
Yeah.
done anytime during
And that's
the year.
easy. It's if you work for a big corporation,
You
that's
probably-
the human resource department.
Right.
Go in there and
Exactly.
ask them for that W-4.
Well, some of them you just go in and you can go
You can
right
get
on
online.
there.
Yeah,
Human
yeah.
Resources online and it gets taken
It
care
gets
of.
done, yeah.
But that again can be done throughout the year.
Anytime, right.
Right. There's
Right.
no, you can only do it at this
Exactly.
month or this month.
Anytime,
It's
yeah.
Anytime.
Yeah.
Anytime. Now, you mentioned earlier that the law changed for businesses also.
Yeah, there's actually quite a big change for business. And not just big corporations or partnerships, everyone, even the small self-employed fella.
Oh, better or worse, or is this
It's
the
better.
same?
Better.
Better?
It's called
Better.
a QBID. It's a business interest deduction, qualified business interest deduction. It can be up to 20% of the income that business earns.
that they can
Okay, there are a
save.
few, rules you have to follow and make sure. There are specific types of businesses that have different rules, but you could easily save some money, on your taxes by that, and that's across the board.
Well, I think that
Yeah.
people should appreciate that because a lot of people, because of what was going on, were looking into self-employment.
Right.
And you want your mom and pop
Right.
shops to thrive.
Exactly.
So this is definitely something that will help them a lot.
And not
It
only
will.
that, whereas when you're working, you cannot no longer take your expenses, When you're self-employed, those expenses are deductible.
Ah, so that's
so
a nice
that's
change.
another good
Right.
thing, right?
Okay.
Exactly.
So if my girlfriend wants to know why I'm smiling, that's
That's
why.
why. Okay.
So as baby boomers are retiring or getting close to it, what do you suggest they do to plan ahead? Because that's different. Now you mentioned the Social Security didn't have
Exactly.
that much of a change.
Right.
Right. Because they was Social Security withholds at a flat percentage. So if you were having 10% taken out before the change, you're still having 10% taken out, you probably had more than enough withholding. So if you're going to retire, it's a good time to go over all of your finances. See if you're getting a pension, you should have taxes withheld. If you're getting Social Security and it's going to be taxable, because not all Social Security is taxable, depends on your other income.
Okay.
So if you find out that your Social Security is taxable, by all means, have them take a percentage out so that you're not hit with a big, tax bill that first year that you retire.
And baby boomers also, depending on where they work, they have to see how their pensions might be taxed, or they may have deferred annuities.
And that varies,
do-
right?
Oh,
There's
yeah,
nothing
yeah.
straight
They
line
need,
about
Exactly.
that.
no,
Right,
they need to
right.
actually, if they don't understand it, they really need to talk to someone so that they can get help and they don't get a surprise once they
Right.
retire.
Yeah.
Would you encourage people, I'm just throwing it out there, to go, like, tax-wise, it sounds great, like self-employed. Because they're giving out a
Yeah.
lot of grants now.
Yes,
Absolutely.
yes, yeah. I think it's a good thing, If that's where you want to try it, there are tax benefits to it.
Because unemployment, when you get
Yes.
unemployment, it is now at its lowest, but still, people are on unemployment.
Right.
Some of them said, take out my
Right,
withholdings.
right.
Some did not. Now, that's a bad situation to be in.
Yes, it
Yeah,
is.
yeah. A lot of people don't even realize it's taxable at all.
It's still income.
But it's regular income
income.
tax
But
at the
that's
same
what they
rate.
don't realize about the
Right.
rich either, because they don't need to make money. They already have it.
They have
so
it,
you
right.
could say
Right.
we're taking 90%, and they're laughing at you.
They don't need it.
What are you taking me? Nothing.
No,
Right.
unemployment though, really, a lot of people, they get the unemployment, like Fran is saying, is they don't know that that's going to be taxable, and they
Right.
really do get hurt from that. And also when you're retiring, if you take money and you don't roll it over into the same type of account, you can get penalized quite a bit with
There
taxes.
are severe
Yeah,
penalties
yeah.
for
Very,
that.
very
That
severe.
it's
yeah.
like just don't
Right,
touch
don't
it.
do that,
It's not
yeah.
worth it.
Yeah,
Ask.
if you're going to do that,
Right.
you need to move that money within a certain period of time, put it in the same
And
type
those are
of
things
account.
they need to pay attention to.
Yeah.
Absolutely.
Yeah. Because there is.
People come in and that's what they have, and,
Oh.
and then they get taxed unmercifully, and
Right.
it's like, but I didn't know.
Yeah, they lose 50% of what they've taken. If you're under 59 and a half, it's a flat 10% penalty. If you're taking from an IRA or a deferred comp plan.
Yeah, and depending on what's
Yeah.
in it, but
Right,
percentage-wise,
depending on what it is. Exactly.
percentage-wise, it's not good. When they do percentage,
Yeah, yeah.
it's
right.
You're getting hurt.
Exactly.
yeah,
Yeah,
you're going to feel
exactly,
that.
Exactly.
You're definitely going to feel
Yeah.
that. Well, we shared a lot of information about a lot of different things. I think ultimately it does come down to the individual and their situation and strategy to get the knowledge, right?
Yes.
Yeah, exactly.
Was there anybody happy that was
Yes.
coming?
I
No,
am.
yeah, you
I'm
do.
very happy.
You do.
You're very happy.
See?
Good for you.
Okay.
I
Yes.
happen
You
to
know
be
what to
happy
do,
too.
right? See?
But
Yeah, yeah.
that's it. When
Right.
you have
Knowledge
is power.
Exactly.
absolutely.
Exactly. Right.
Ignorance is not bliss. You needed to get a jump on it. And if you didn't do it for this year and you're feeling it, I mean, I'd hate to promote this, but let's not everybody get scared because the IRS makes payment plans. So it's
Oh,
not
yeah.
like
Oh, yeah,
you
no,
have
no,
no.
to
Oh, definitely,
say,
right.
I can't eat for this month.
Exactly.
Make the payment plan.
Yeah.
Yes.
Yeah. Yeah.
I would encourage that instead of
yeah.
getting all depressed because
Right.
Yeah,
Yeah, you
learning
just
is
pay it, right.
fundamental with this.
Yeah.
Well, they
You
need to
don't-
strategize
yeah.
so this doesn't happen again
Yes,
Right,
so you
for
need
next
to
year.
learn
Yeah.
and just plan it out. And the IRS is not putting you in jail. You make a payment
Right.
plan if you owe, and it'll all get
Right.
done.
Right.
We do that for our people, our clients all the time.
Yeah, yeah.
So it's nothing to get.
So it's
Too
easily
super-
arranged.
Yes.
They don't have
Oh,
to
yeah.
be
Yeah.
looking for a noose or
No,
anything like
no.
that. It's not detrimental, and it can change. It can actually change if you strategize and if you plan, and you can actually get ahead and you can benefit.
And I do want to mention, not only withholding is not the only way to pay in tax. You can pay an estimated tax. So if you're not employed,
And, well,
or you just want to
self-employed people
self-employment
that's
people,
huge.
exactly.
Every quarter.
Right, every
Get your little
quarter.
coupon.
Exactly, and you pay it in based on, what you think your tax liability is going to be.
And the projections, correct? You could do your little projections
Right.
when it comes to September.
Exactly.
Well, I do want to thank you, Madeline, and Fran.
Thank you.
So much. We shared so much knowledge. Baby boomers. Baby boomers, I hope we gave you a lot of knowledge and a lot of things to think about. If you haven't already done your taxes, the America's largest tax team is ready to help you. You can always find out by emailing. What is the group that we could email here, David? You can call into CTV and we'll give you the information that you need to go and visit with somebody if you don't
Okay.
have an accountant or someone that you could speak with. There are definitely ways to strategize.
Oh, definitely,
Be better
definitely, yeah,
prepared
yeah.
and not be angry, because it's about
Exactly.
living
That's
well
what
and
it
being
is, yeah,
happy.
Yeah.
Yes.
And we can also, if you find that there's something we mentioned that you might have missed on your return, we can, or anyone can do an amended return.
Yeah,
Yeah,
we're gonna go,
yeah.
but
Okay.
before we do, you do get to change it.
Yeah, you can
Right, you
change
can
it up to
amend your
3
return.
years. Yeah,
Up to 3 years.
right. You can go and correct whatever it is that you, either a credit you didn't claim or income you forgot to report, whatever it is, you can amend a return.
But the IRS can come after you. The 3 years
Yeah,
doesn't count.
that's true. Yeah.
What if they say, I don't want to make the payment plan now and I want to wait? Do they do an extension? Is that any benefit?
An extension
Oh.
is an extension of time to file, but not an extension to pay your additional.
They still
tax.
charge you interest.
Oh, yeah.
And
Yeah.
penalties, which can
Yeah.
be.
So you're better
Right.
off filing.
Yes.
Yes.
Right.
And if
You
you have the
file,
money, pay it. And if you,
If you
don't,
then you make your payment plan.
Right.
call immediately for the payment plan, though,
Right.
correct? You don't
Right,
hesitate
because
with
this
that
way
either.
Right, right.
By filing on time, you don't get a late filing fee.
Yeah,
and that's
which is
something
higher.
you want to avoid. That's very high.
All right. Good luck, everybody, with filing on time. Want to say thanks again, Madeline and Fran.
Thank you.
Baby boomers, I hope that we gave you some information that's useful for you.
Yep.
I hope so too.
Yeah, thanks for having us.
This is
Okay.
the 7th year
Yeah,
that this was
7th year
done.
we've been doing this, right?
7